back to my channel. Today we are diving into one of the biggest economic disaster of the time, the 2008 global financial crisis. What caused it? How did banks collapse? And why did the entire world suffer from a housing mess in the US? Let's break it down simply. In 1996, dot-com boom was going on in US and technology company stock prices were running high at that time. But further between 2000 and 2002, dot-com bubble burst, meaning stock prices saw a sharp decline in their prices, and because of that, people were withdrawing money from stock market. In 2001, interest rate in US has fallen to just 1%. So at that time, stock market was running low, and hence people did not want to invest in stock market. Since interest rates are low, investors didn't even want to keep their money in the bank. Investors were looking for good opportunities, and at that time real estate market is increasing. Even the US government was encouraging people to buy houses. Since the interest rate was very low, so the people were keen to take housing loans. This way demand for houses was increasing and rate for properties were also increasing. Banks were practically begging people to borrow money, especially for houses. Everyone thought home prices would never fall, so people rushed to buy homes even if they couldn't afford them. This led to a housing bubble where home prices rose way above their actual value. And here, where it gets dangerous. Banks started giving mortgages to people with really bad credits called subprime borrowers. But why? Because they could sell those risky loans to investors. Investors started paying attention to the real estate in US due to increasing rates. Investors start investing as they thought in US housing demand keeps on increasing. So investment banks also wants to gain from this. Investment bank works as a mediator or arbitrator. They help company in raising or creating capital, help company in merger and acquisition, and sell derivative products and derivative trading. Example, Morgan Stanley, etc. So now, investment banks start purchasing loans from banks. They used to combine a lot of loans, make their bundles, and create a complex derivative products. They named it as collateral debt obligation, CDOs. The investment bank got credit rating on CDOs by credit rating agencies. And the worst part is that these products were given AAA ratings by credit agencies, meaning investors thought they were super safe. So at that time, AIG, the biggest insurance company, started giving away insurance on these CDOs. So AIG was thinking as AAA rating CDOs, failure is negligible and started providing insurance known as credit default swap CDS. AIG gave away big bonuses to employers for selling CDOs. The problem arises when homeowners couldn't pay their mortgages, everything started falling apart. Defaults soared, the housing market collapsed, and those safe investments turned into toxic waste. Banks like Lehman Brothers were bankrupt, and the companies like AIG needed massive government bailouts. The financial world panicked. The US crisis spread globally because banks around the world has invested in American mortgage assets. Credit froze, trade slowed, jobs were lost, people couldn't get loans, even businesses were struggling to survive.